Securities and Exchange Commission of Nigeria hosted its third quarter 2018 Post-Capital Market Committee press briefing in Lagos. It was an opportunity for the Acting Director General of the Commission, Mary Uduk, to give correspondents an update on the key resolutions from the meeting as it affects the market.
The meeting, as we all know, is a periodic gathering. It's a quarterly gathering of stakeholders in the Nigerian capital market to discuss capital market-related matters. The event was very well attended by stakeholders in the market and featured presentations by various market technical committees in the market, self-regulatory organizations, and other stakeholders. In keeping with tradition, participants held robust deliberations on various issues affecting the overall performance of the capital market. The following resolutions were, however, reached at the meeting. I'm therefore delighted to report that on the lingering issues of multiple subscriptions and forbearance of shareholders with multiple accounts, the CMC agreed that the forbearance window should be extended by another year from the 31st December 2018 deadline previously communicated. We expect investors to take advantage of this opportunity to claim their unclaimed dividends and bonuses. The Commission also announced a two-pronged approach to address the intractable challenges associated with transmission of shares related to estate of deceased investors. The first step would involve engagement with an enlightenment of the probate registry with a view to providing solutions to the cumbersome process of transmitting shares. Secondly, rules would be developed around the time frame for transmission of shares and probably the fee structure.
She also talked about the FinTech roadmap, e-dividend campaign awareness for shareholders, amongst other issues.
In order to boost the e-dividends mandate and direct cash settlement initiatives, the Commission gave a commitment to the market that it would engage NIPS, that's Nigerian Interbank Settlement System, on behalf of the capital market community to facilitate identity validation and accounts validation in an effort to enhance market processes. The Commission will also work with other major stakeholders in setting up a committee that will look into and profess solutions to problems around identity management in the Nigerian capital market. In furtherance of the commitments to develop a vibrant commodities ecosystem, the Commission has commenced the implementation of measures to strengthen regulatory capacity by establishing a commodities division. Other recommendations of the committee have been broken down into implementable plans with set timelines. An interesting development in the commodity sector is the innovative solution developed by Afex Commodities Exchange Limited and its partners regarding the use of blockchain technology to streamline the process of financing agriculture to smallholder farmers and other players in the commodities market. For us, this was very exciting and interesting. We formally inaugurated the FinTech Roadmap Committee, chaired by Ade Bajomo. The committee is expected to develop a FinTech roadmap for the capital market within the next 3 months. The market provided an update on the electronic distribution of annual accounts by public companies to shareholders. It was reported that the shareholders have largely accepted the new initiative and are willing to provide their emails. It was agreed that further sensitization would be carried out by stakeholders to enlighten shareholders on the benefits of the initiative. For us, this is particularly important because in the past, a lot of shareholders used to complain that they did not get the annual report, either due to NIPOST issues or one form of delay or the other. But right now, with this initiative, once a shareholder's email is with the company secretary, all they do is to just send you the report within a click of a button. So you get it and prepare to attend the AGM without having to wait. Sometimes they used to wait until after the AGM before they will get the annual report. But now it's a lot easier. So we are going to carry out a lot of enlightenment programs, to shareholders for them to really embrace this initiative. And what we have also said is that registrars and the Commission's representatives, other stakeholders who will be representing their different organizations at the AGM should also take out a few minutes at the AGM and enlighten the shareholders so they understand the importance and the benefits of this initiative. On the need to grow the market for trading in securities on unlisted public companies, the Commission is making concerted efforts in collaborating with CAC and other stakeholders to assist public companies that are yet to register their securities to do so without much difficulty. Similarly, in order to enhance investors' confidence in the market, the Commission is stepping up efforts to ensure that public unlisted companies provide quarterly and annual performance reports. This would assist investors to make more informed investment decisions. As part of efforts to eliminate underhand dealings, the Commission is set to take enforcement actions against any person engaged in trading in the shares of public unlisted companies outside a recognized securities exchange as provided by our rules. With respect to the registration of trade groups, currently 6 trade groups have registered with the Commission, while those yet to do so were urged to comply with the directives. This is an important development as it would facilitate implementation of the complaints management framework, among other benefits. In the same vein, CMOs were enjoined to register with their respective trade groups. The Committee on Minimum Operating Standards has also submitted its final report, and a time frame for implementation of the standards would be announced soon. The Commission announced that it was awaiting the final report of the EIPO committee in order to issue guidelines and develop the rules for EIPOs. In this regard, the committee is expected to submit its reports in 2 weeks. We continue to seek the support of the media and continuous collaboration in order to develop the capital markets to the benefit of investors and the nation at large.
Mr. Akinsola Akeredolu Ale, Vice Chairman, Association of Stockbroking Houses of Nigeria, speaks on why shareholders have to awake to their responsibilities in the companies that they invest in, especially during the annual general meetings.
The shareholders that we have don't know the kind and the volume of power that they have in controlling whichever organization that they belong to, that they own. And there's majority interest, there's minority interest for shareholders there. And CAMA on all the laws makes it very clear that when you're a shareholder, a normal shareholder, you have a lot of power. And that's why the risk is on you if your company is going to go down. So you are supposed to, almost all the time, protect your investments at any point in time. And like you heard the president of CIS said, when you go for AGMs, you should ask questions. You should be able to say what is going on with our company, and then it will be registered. And for them to make any decisions also, they have to come to AGMs based on the rule to make the decisions from you people. And if you raise your hands and say that they should go ahead with the decisions, and they make decisions on your behalf, and the company does not go well, then you take the brunt of whatever decisions are made at AGM. Also, I think there's supposed to be a high level of exposure for the corporate governance code, which SEC has. If you go into the corporate governance code, you see that even the governance for the board structures, how many people are you supposed to have on the boards of those companies? How many independent directors are you supposed to have? How many executives are you supposed to have? How many technical partners are you supposed to have? All those things add up. What is the quality of people on the board? How do you select your board members? And how do you hold them responsible? All those things are in the code of governance for SEC code of corporate governance. If you go into CAMA, you will see all the power that has been given to shareholders. No, so now when you're a shareholder and you now decide to be a sleeping shareholder, what you get at the end of the day is decisions have been made on your behalf, and if it's to your detriment, you lose a lot of money. But people mentioning CBN has played its role. CBN had always said that they will protect depositors, and CBN protected depositors, and depositors have not lost money in that particular bank or in any other bank, which is the right thing. And SEC as a regulator has provided the code of governance for it to look at, to spread to the various investors. CAMA has provided what are the requirements, what are the rules that govern shareholders. If you implement that very well, and you know you're a shareholder, even if it's 100 units, and you object to things at an AGM, at least you will have registered, you have a point there. But if you keep quiet and you're a sleeping investor or a sleeping shareholder, this is what you get in return. So it's a wake-up for the whole industry, for the various companies, for the various shareholders, to go to AGMs, and when you have issues, address them, look at your financials line to line. If you see issues there, ask questions and raise things. And if you speak at the AGMs and you don't get necessary feedback the way you want, you can write petitions also to the Securities and Exchange Commission that this is what you've seen in the document and this is your position. Then you'll be able to protect your investments and you'll not be caught sleeping or caught napping when decisions are made by the regulators.
An interesting development is the commitment of the apex regulator of the market to driving the roadmap for fintech, thereby setting a framework for how it intends to approach the disruptions that will feature prominently in the digital economy.